GameStop, the company you forgot existed roughly 12 seconds after the meme stock saga ended. The company whose entire personality is remember when Reddit broke Wall Street? That GameStop just walked into a boardroom, took a deep breath, and offered $55.5 billion to buy eBay with money they functionally do not have. With a market cap one-fifth the size of the company they're trying to swallow whole. And this isn't a joke. This is not a press release written by an intern who got into the edibles. This is real, official SEC file bid from the brick and mortar dinosaur that sold you scratched copies of Madden 08 to acquire the digital flea market your grandma uses to sell Beanie Babies. And I cannot stop laughing because I also cannot look away, because the more you dig into this, the more you realize there might actually somehow, against every law of corporate physics, be a method to the madness. So buckle up. We're going on a ride. Let's set the table real quick. GameStop, NYSE, ticker GME, the original meme stock, the company that became a religion in 2021 when an army of basement-dwelling diamond-handed apes decided they were going to bankrupt Melvin Capital from a Discord server. That GameStop currently sits at around an $11 billion market cap. eBay sits around $55 billion. So we have an $11 billion fish trying to eat a $55 billion whale. And the fish is going around telling everyone, no, actually, I'm a shark. I read a book about it. The bid is $125 per share, half cash and half GameStop stock. It's a 46% premium over what eBay was trading at back in early February when GameStop quietly started buying up shares in the shadows like some kind of low-budget corporate raider cosplay. They built up a 5% stake before anyone even noticed, which, by the way, it's impressive. The most surprising part of this story, though, isn't that GameStop made the offer. It's that GameStop snuck around buying eBay stock for 3 months and nobody on financial Twitter caught it. Now here's where it gets spicy. Ryan Cohen, the guy running this whole operation, this is a man who founded Chewy, the online pet store, sold it to PetSmart for $3.35 billion, and then decided, you know what would be fun? Buying GameStop and turning it into something. He owns roughly 9% of the company. He takes no salary, no bonus, no golden parachute. His entire compensation is, if the stock goes up, I make money. If it doesn't, I eat ramen with the rest of the apes, which, in an era where every CEO is paid $40 million to run their company directly into a cliff face, is actually kind of based. I'm not going to sit here and pretend Ryan Cohen is some kind of folk hero. He is a billionaire. He is fine, but the man does have a track record of taking a flailing business, cutting the bloat, and making it not bleed money. GameStop went from a $381 million loss in 2021 to a $418 million profit last fiscal year. They paid off all their legacy debt. They raised $4.2 billion of long-term debt at a 0% coupon. 0% coupon. Do you know what it takes to get a 0% loan in this economy? You have to be a sovereign nation or have something deeply, deeply incriminating on the lender. So whatever else you want to say about Cohen, the man can squeeze a balance sheet. Okay, so the obvious question, how? How does a company worth $11 billion actually pay $55 billion for another company? And the answer is, like a lot of corporate magic tricks, it's mostly vibes and other people's money. GameStop has about $9.4 billion in cash and liquid investments sitting on the balance sheet. That's the meme stock war chest, the pile of treasure they accumulated when retail traders sent the stock to Pluto. They've got a highly confident letter from TD Securities for up to $20 billion in debt financing. And the rest of it, the other $26 billion-ish, comes in the form of GameStop stock that they would print and hand to eBay shareholders. Which means if you're an eBay shareholder, half your payday is in cold hard cash, and the other half is in shares of a company whose entire valuation is built on the back of a 5-year-old Reddit thread. That's the deal. Take it or leave it. And here's the part that nobody on CNBC wants to admit out loud. eBay is cooked, like deeply cooked. They spent $2.4 billion on sales and marketing last fiscal year. $2.4 billion. That is enough money to launch a cable network, fund a small war, and still have enough left over to buy a private island. And what did they get for it? They added 1 million new active buyers. 1 million. They went from 134 million users to 135 million users. That is a less than 1% growth rate on a marketing budget that could fund the GDP of a small country. eBay is throwing money into a bonfire and calling it a strategy. They are the digital equivalent of that one mall near you that still has a Sears with 3 lights on and a Cinnabon. The brand is universally recognized. Everyone on Earth knows what eBay is. They don't need $2.5 billion in advertising. What they need is for someone to walk in there with a chainsaw and start cutting until the company stops resembling a corporate version of that show Hoarders. And that is exactly what Cohen is pitching. $2 billion in annual cost cuts within 12 months of closing. He claims that just the cost cuts alone would push eBay's earnings per share from 426 to 779 in year one, almost double from cuts, just from the cuts. So here's the actual logic, stripped of all the meme stock theater. Ryan Cohen looks at eBay and sees Chewy 2.0. He sees a company with a recognizable brand, bloated infrastructure, lazy management, and a lot of low-hanging fruit. He sees 1,600 GameStop retail locations across the United States and thinks, what if those became eBay drop-off points, authentication centers, live commerce studios, fulfillment hubs? Imagine walking into your local GameStop, which currently exists primarily to sell you a candle that smells like a Nintendo cartridge, and instead handing them a vintage Pokemon card to authenticate, list, ship, and sell, or hosting a live auction stream from the back room. That's the pitch. GameStop becomes the physical backbone of a reborn eBay, and eBay finally becomes a legitimate competitor to Amazon. On paper, it's actually brilliant. Now, let me put my serious face on for a minute because I think there's something genuinely worth talking about underneath all the absurdity here. We live in an Amazon world. Amazon owns commerce, they own logistics, they own cloud computing. They own a chunk of the internet so massive that when AWS sneezes, half the apps on your phone catch a cold, and the alternatives are dying. eBay used to be the Wild West of online commerce. Etsy is being slowly suffocated by AI slop and drop shipping. Walmart's online presence is fine, but it's Walmart. There's a real structural civilization level problem with one company controlling that much of how people buy and sell things on the internet. And as much as I want to dunk on GameStop for this whole scheme, the fact that anyone is even attempting to mount a serious challenge to Amazon's dominance is in a weird way kind of important, because if nobody tries, nothing changes. The legacy giants like eBay just keep slowly bleeding out. The retail spaces like GameStop just keep slowly dying, and Amazon just keeps eating. So if this deal is hilarious, even if it falls apart, even if it never happens, the conversation it's forcing is one that needed to happen. Somebody somewhere needs to be a real second option. And right now, nobody's volunteering. Okay, sincere face off, back to roasting, because the response from the market to this announcement was perfect. Just chef's kiss perfect. GameStop announced the bid. They went on CNBC. Ryan Cohen did an interview that has been generously described in the financial press as combative and less generously described as a man who clearly has not been on TV since 2021. And the stock sank. GameStop stock tanked on the news that they were trying to do the biggest acquisition of their company's life, which is the market's way of saying, yeah, we don't think you can pull this off, my guy. The apes are not happy. The hedge funds are popping champagne. eBay's board released a statement that was the corporate equivalent of, thanks, we'll think about it, while making direct eye contact with the security guard. Everybody and their mother thinks this deal is dead on arrival, and maybe it is. Maybe this is just Ryan Cohen swinging a giant flaming sword in the general direction of the financial press to remind everyone he exists. Maybe it's a negotiation tactic. Maybe it's the opening shot in a longer war where GameStop just keeps buying eBay shares and eventually gets a board seat. We don't know. But here's what we do know. 5 years ago, this company was supposed to be dead, bankrupt, liquidated, sold for parts. 5 years ago, the consensus on Wall Street was that GameStop was a relic, a shambling corpse of a business model, a blockbuster in waiting. And now that same company is sitting on $9 billion in cash, has zero legacy debt, is profitable, and is making $55 billion acquisition offers for one of the original dot-com era titans. Whatever you think of the MemeStop saga, whatever you think of Ryan Cohen, whatever you think about the absolute chaos energy of all this, you have to tip your hat to the absurdity of the situation. The company that was a punchline became the company writing the punchlines. The company everyone wrote off is now writing checks. Big ones, maybe checks they can't cash, but big, beautiful, audacious, probably going to bounce checks. Will it actually happen? Probably not. Probably eBay's board says no, GameStop stock keeps cratering, the financing falls apart, and we never speak of this again until next year when Ryan Cohen tries to buy Best Buy or Kohl's or Build-A-Bear or whatever the next bloated retail corpse is. Could it actually happen? Surprisingly, yes. The numbers weirdly make a kind of sense if you squint hard enough. eBay genuinely is bloated, the cost cuts genuinely would unlock value, the retail footprint genuinely is an asset Amazon can't replicate overnight. The pieces fit together if you don't look at the price tag. And if you are looking at the price tag, well, you're not the target audience for a Ryan Cohen pitch deck anyway. Either way, this is the most fun thing to happen in the corporate world in years. A meme stock dinosaur trying to swallow a dot-com era dinosaur to compete with the dinosaur that ate everything else. It's the corporate equivalent of two old wrestlers coming out of retirement to fight Brock Lesnar. You know how it ends, but you're going to watch every second of it. So that's the news, that's the analysis, that's the take. If you enjoyed this video, do me a huge favor, hit that like button, hit subscribe, drop a comment letting me know if you think this deal actually happens, or if Ryan Cohen is just out here doing the corporate equivalent of yelling at the moon. And if you really want to support the channel, share it with one friend who still thinks GameStop is just where you go to trade in your old Wii games. We're keeping the gaming industry honest, one absurd corporate move at a time. I'm Kyler Ray. I'll see you in the next one.